with more people moving to Central Texas every single day, there's no doubt unaffordability continues to be an issue here in Austin.
But will home prices ever drop back down to an affordable price? KVUE's Darrenisha Heron spoke with a real estate consultant who says it could happen sooner than you might think.
What goes up must come down. That saying hopefully applies to Austin's soaring home prices, with the median price hitting $640,000 in April.
Austin is arguably in the largest housing bubble in America based on the fundamental data.
Nicholas Jurley is the CEO of real estate data analytics firm ReVenture Consulting. He says when Austin's housing market bubble pops, we could see the largest decline in home prices in the country. Jurley says historically, it takes about 5 years for a market to crash, but he is predicting a 30 to 40% decline in home prices within the next 3 years.
I know a lot of people are going to say 30 to 40% decline is impossible. But 2 years ago, you'd have said there's no way Austin could appreciate by 70% in 2 years.
Jurley looked at 4 categories to determine when our housing bubble could pop. 1, the local price to wage ratio.
So the cost of buying a home has gone up 9 times faster than the income people are earning. And that's one of the telltale signs of a bubble.
2, the rent to buy ratio.
It costs almost 2 times as much to buy a house with mortgage and tax payments than it does to rent an apartment. So that means people are going to be more incentivized to rent into the future. Home building.
3, the economic risk of big tech. With so many tech companies in Austin, Jurley says the city is at risk for a potential downturn.
It's no secret that to start the year, tech stocks have been performing poorly. We're starting to see layoffs even in Austin. A big startup called WorkRise laid off some people in March. Electronic Arts just laid off people in Austin.
And lastly, inventory. It's still pretty low, but Jurley says homes like this are being built 2 times faster than they were 3 years ago, and more homeowners are selling. According to Redfin, the number of listings this month is up 15% compared to this time last year.
It's really the people who bought in the last 1 to 2 years who have the most to be concerned about in terms of all of a sudden the value of their property is less than they bought it for.
Jurley says investors may be most affected by a drop in prices. According to the property data firm CoreLogic, investors bought about 1/3 of all single-family houses sold in the Austin metro area last year.
They're buying at valuations that don't make sense. So I think, a lot of them will get burned.
Bad for them, but could be good for Austinites craving affordability if they can wait for it. In Austin, I'm Darrenisha Heron.